Hi everyone, how's it going? Shane Phillips here, and today we are going to be analyzing some potential investment opportunities in the fast food industry. First, let's take a quick look at some of the trends we've seen in the industry over the last few years. First trend we look at is the fact that tech is absolutely taking over. Fast food chains are starting to offer options that allow customers to place orders digitally, whether that be with mobile apps, electronic kiosks, or online delivery services. On top of that, deliveries are estimated to surge around 79% in the industry by 2022. Great trends for margins and customer satisfaction. However, offsetting these trends, we see a shift towards increased health awareness and steeper competition. Traditional fast food restaurants have struggled to retain customers that have lost the appetite for their unhealthy food offerings. In addition, margins have been further driven down by the need to compete in an already very saturated market. Competition is also often conducted via aggressive marketing and discounted deal strategies. We see the effects in the stock price performance of these major players in the industry. As you can see, essentially all of them are down over the last year, with the exception of Yum! Brands. We will now take a closer look at 3 of these 4 companies. The first company I'm sure you're all familiar with is McDonald's, the largest restaurant chain in the world. Second, we have Yum! Brands, the holding company for KFC, Pizza Hut, and Taco Bell. Then last, but most certainly not least, we have Bojangles. Definitely the smallest player of the group, they focus on Southern-style fried chicken. To compare the investment opportunities, we first look towards the results of our intrinsic valuations. With a whopping 160% potential upside based off of our DCF analysis, Bojangles undoubtedly stood out as the most undervalued stock. Unfortunately, they have not traditionally paid a dividend. Similarly, the dividend discount model is also a poor proxy for Yum! Brands because their dividend yield is so low, sitting at around 1%. However, looking towards the DCF, Yum! Brands may be slightly undervalued with a potential upside of 28%, whereas McDonald's is undoubtedly overvalued according to both our DCF and dividend discount model. Feel free to see our model in the appendix for all of our assumptions. Looking towards the relative valuation, we see the same sort of trend. On all fronts, including trailing 12-month PE, forward PE, and price to sales, Bojangles is trading at a huge discount relative to its peers. No doubt in our mind that this stock is crazy cheap right now. Looking more deeply into the situation, we realized that Bojangles has underperformed ever since it went public back in 2015, down over 40% since its initial public offering. The chain has performed well on an operational level, consistently growing year over year. However, performing well hasn't been good enough for shareholders when the public competitors are large global players such as McDonald's and Yum! Brands with far greater reach and capabilities. In our opinion, this means that Bojangles is more than likely eager to go private and eliminate some of the shareholder pressure. They are currently one of the smallest players in an extremely competitive industry where the publicly traded players also consist of mostly conglomerates such as Yum! Brands and Restaurant Brands. For those of you who don't know Restaurant Brands, they own Burger King, Popeyes, and Tim Hortons. But back to our point. Our point is that we believe Bojangles is a prime target for an acquisition by a company that already owns some of its competitors. To top things off, Bojangles is an even more attractive target because of how cheap their stock price currently is. But what exactly does this mean for the stock price? Usually when companies get acquired, they are bought at around a 20 to 30% premium, which means that upon the deal announcement, the target company stock price will usually take off. In the case of Bojangles, there has already been some talks about a potential acquisition by local Atlanta private equity firm, Roark Capital. Roark is currently the majority owner of Arby's, recently acquired Buffalo Wild Wings, and attempted to acquire Popeyes in 2017. So there's no doubt that they would have the appetite for a deal of this nature. However, even without a potential acquisition, Bojangles has strategic plans in place to reorganize underperforming restaurants, amp up their marketing efforts with programs such as 2 for $5 Bojangler sandwiches and a Bo-Smart menu with healthy options, and are currently looking into how they can offer delivery and other tech-enabled services for customers. In our conclusion, it's Bo time!